Okay, welcome back, everybody. Here we go. Lots to unpack again. This is now, we're into March, but we're looking back at some of the February statistics just to see what's happening in the market. Lots going on, so let's get started. This is a really important chart I wanted to kind of explain. So we've had, you can see here going back 4 years, this is the average price in the market for our single detached homes. And you can see that there's always these little dips, and then we get growth and a little dip and a little pullback. We get growth and pullback, and then we get lots of growth here, further growth. Okay, little pullback there, some growth. Okay, right up till the peak last year. And then we had that big pullback with all the rates. And then this was really flat. Not much going on here, even a slight pullback, okay, just from like say, December of last year to January. But, in line with the 21, mid 21 pricing, and we covered that in our last segment. But here we go. Here is our first indicator that things are starting to take off. And I'll explain that. So we always have these external forces. We talk a little bit about it, where the market gets, reined in a bit. Happened back in 2017 with the stress tests. We talked about that. It happened again during COVID. We had a little bit of a backlog. People that wanted to get in the market couldn't get in. Same thing with this whole time period with rates and then the uncertainty that followed. Well, now that the Bank of Canada did actually put a pause on rate increases, there are several indicators that things are going to start to swing back the other way. And we'll get into that on some of our following slides. But good news, it looks like the real estate market in the GTA is actually starting to tick back up. All right, so of course we have those headlines that always like to tell us about the giant pullback we had from last year. But again, that is a small indicator because it's basically February of last year over February of this year. These headlines are coming to an end because the market had stabilized a lot by March or April of last year. So given that we were at those peaks last year around this time in February, March, right, we're seeing that there's a big divide between last year and this year. Now, if you look at the average price here of $1,095,000 recorded in February this year, there's where they're getting that 18% decrease from last year. But if we look a little further down, guess what? There was a pretty good increase from 21 and a giant increase from 20 or 19 or 2018. So overall, we got some fantastic growth other than that little blip in the market last year. Inventory is also quite solid here. Our standing inventory is just over 2 months right now. Again, that's really good news because that means we have a very brisk market in terms of sales. Good to know. In the GTA, again, we're looking at year over year. We got that decrease right there. When you look at the average sale prices, condos, not as much. Condos have been really, really good in terms of holding their price point, and that's because it has that lower price of entry. So people can get into the market for a lot less money. Over here, we look at this headline that says homeowners should be looking at shorter term mortgages. That's good advice, actually, especially given that there's expectations for the rates to now pull back. What goes up must come down. And so with the rates increasing as quickly as they did at record paces last year and right into the beginning of this year, you're now going to likely see that pendulum start to swing back the other way. So expect to see that. And if you're in a shorter term mortgage, that just means it's easier for you to flip out. Let's say when that mortgage comes to maturity, you can get into a lower rate, presumably. And that's what everyone's kind of expecting. Take a look here. Our number of sales is down. Again, that's month over month, last February over this February. It's down a fair bit, but there's buyers out there, and I've seen it. So for every sale I've seen recently, I've seen several people walk away and not get a chance at purchasing that particular property. So you'll see 4 or 5, sometimes as many as 30 people interested in this particular property, but there's always one person that is the winner in that transaction. The rest of the people are still out in the market looking. Toronto market sales, not as bad, only 10% year over year change there. Listings, same idea. So about half, sorry, my apologies, sales. Okay. And over here, we can see that Bank of Canada rate cut now a near certainty. So that's what a lot of people are predicting. There's a lot going on in the market. You may have seen recently that article basically talking about our central bank signaling that there might be some rates pulling back as much as 0.5% between now and the end of the summer. So look for that. They are forecasting a rate decrease now. 2 months, 2.36 months of inventory in GTA or in Toronto market rather. So again, very healthy, very brisk sales going on. Things that go on the market, our whole inventory does tend to sell quite quickly still. Despite our active listings here, you can see here at 4110 being high compared to last year at this time, you'll see that if you go further back and further back, you can't see it further back from 20 here, but in 2018, 2017, we're right back in line with the listings that we had at that point in time. So good to know that we still have a lot of listings out there and it's not taking very long for those to sell, okay? So on this slide here, we're looking at our monthly sales data. On the far left, you'll see the number of sales, the active listings, the months of inventory, the average price, and the GTA with days on the market for the properties that are available. And this is a 12-month snapshot. So on the far left, you're looking at February of 2022. And on the far right, February 2023. So you can see over here, a number of sales are down almost half. Our active listings are actually up from where they were last month, but very stable. I'd say if you're looking back right from March of last year, things are at or higher than this level. Months of inventory here at a nice healthy just over 2 months of inventory. And our sales haven't seen this type of values since about April of last year. So we're doing pretty strong on the price here as well, the average sale price. And then our days on the market at 22. So things are moving pretty quickly. By all indications, it's going to be a really good spring market. So we'll be keeping an eye on that. Get back to you again with some updated statistics next month. And thanks for tuning in. Everybody have a great day.